Constructing your life is about much more than just building a bank account. Each week, join real estate entrepreneur and mindset coach Austin Linney as he interviews guests who are constructing their dream lives and impacting the world around them on a daily basis. If you're an entrepreneur or wanting to start a business, or you just want to hear motivating stories of how others have overcome the odds, you are in the right place. And now for your host, Austin Linney.
Guys, welcome back to Construct Your Life. This is Austin Linney here. So we have a new rule now in the podcast. I just did it last week. So when all my friends have kids, the only way to really get their attention is to have them on the podcast. So as much as this is, we're going to talk about life and investing, this is more to catch up with one of my best friends in the entire world. One of the guys that inspires me every day, Mr. Andreas. How are you doing, sir?
Man, I'm good. I'm happy to be back on the podcast. Happy to talk to you. Like you said, we barely talk anymore, but this is a great excuse for us to just catch up.
Yeah, 100%. So if you guys, I'll just give you the quick, if you haven't listened, Andreas works for the endowment fund at UT. He manages way too much money that makes me want to throw up in my mouth. So we're going to talk about investing this year, where we see it heading. Him and I have a lot of different points of views on a lot of different things. He deals with a lot of the bigger items in investing, but I'm kind of more the boots on the ground. One of the things that struck me, I've talked to about 4 different clients this week alone, where the issue I have with investing right now with the way technology is and everything is there used to be like rules. There used to be like, something was going to change. It would change in like 6 months to a year. I feel like it's changing by the week right now. Like, I know that you're dealing with some bigger stuff, some macro stuff, but like on a boots on the ground level, I can't get my hands around anything right now.
Now, the institutions will tell you, look, even the pros, man, are having a tough year. Okay, if you're not shorting stocks, if you're not shorting crypto, or like, it's really hard to make money in 2022. It's really hard. That's the bottom line. And you're right. The reason why things are changing so quickly, it's because the landscape we've been living for the past 40 years is changing. And it doesn't change overnight. I mean, this is a 40-year trend. You're going to change that slowly. It's like the Titanic is going to crash and they're trying to move it. It's like slowly, right? You cannot just fully shift it. That's the economy, the US economy, the global economy. It requires tweaks. That's why you hear the Fed going like a little bit of hike, not a full, 100 bips. They started with 25, then they went to 50, and they're like, oh, we're behind. Let's go to 75. And they've been doing 75 hikes over and over and over. And the same thing with other items like, inventories. Companies get really greedy and they start like buying a bunch of inventory. And then they're like, wait a second, we got ahead of ourselves. We got to slow down the orders.
It's so funny that you say that. We were looking yesterday on the company we're buying. He overbought inventory by like almost $1 million this year. And he did it because supply chain was so hard a year ago, but now it's clearing up. But he's also older and he doesn't want to be anxiety ridden where it's coming from. So one of the number one things we're doing in this business we're buying is doing strategic cash flow and inventory systems to set ourselves up for success instead of having these long months of no. Like, I get it. It is great. You want to have all that stuff sitting there, but is that kind of more like the game that nobody's paying attention to?
Yeah, I think inventories have, supply chains is its own discussion, right? We had COVID, which was like the biggest catalyst for supply chains, right? We've seen China being for 2 decades being the place where all the inventories go to be made, right? And then China decides that, you know what, we're going to close because we want to treat COVID differently. And that affected everybody else. So that's creating a new shift, right? So we went from globalization where, the world's global. You don't need to manufacture anything in the US or in your own country to something where you go fully outsourced. Now it's reversing, right? And those trends reverse slowly. People are slowly starting to plan, right? Like we're seeing like semiconductor firms now building plants in the US, right? There's people are going, instead of China, they're thinking of going to India. Mexico is going to be great for the United States because it's closer. You can definitely move things quicker. Labor is cheaper. So these trends are so long term that they're changing so rapidly, right? Because to the earlier point, they've been going on for 2 decades, 3 decades actually. I think people
Mhm.
call it like when the Berlin Wall fell was the beginning of globalization. The world was open and connected,
Mhm.
and I was like, I don't even know, like what, late 80s, early 90s.
Mhm.
I'm terrible with history dates. So yeah, man, I think that's what's going on. And so people that were trying to get ahead of it, they over order in their inventories, and then those that didn't get ahead of it, they're now trying to catch up. But the problem when doing that is that you're going to overbuy or be short. And depending on your business, man, I think that's what's driving a lot of the inflation problem we're seeing, because people don't know how to adjust their pricing. And if you're a home builder, right? Like, you've been operating under certain prices, and then suddenly like you gotta adjust. So like that's gonna drive up the prices of how you sell the home, like the services that you pay, right? And then labor has been really tight. So how
Yeah.
you pay for that labor is going up, and that's the biggest factor going on right now, right?
Yeah.
The housing market's crashing. All these different things are going wrong, right? Credit's finally slowing down, but man, labor's strong, right? And if people don't want to get a premium for work, then like you as a business owner, you're gonna have to pay more, right? And that's
Yeah.
what drives inflation. That's
Well,
the labor side
it's
of
so
inflation.
it's so funny that you say that. So, we're in the HVAC, plumbing, electric space. We're purchasing one in the next 45 days. We have another one coming right behind it. Dude, I have talked to 30 owners. I've talked to a million people in the private equity space. It's the number one thing. If you don't, we have the business, we don't have the labor. And
Yeah,
everybody's maxed out and they're getting hurt, right? But here's what we did. We're going straight to the source. So what I did when I was in Pennsylvania last week, I went and talked to a technical school. We're
oh
talking to
wow,
the high schools.
yeah.
Like we're talking to the military. Like we're going straight to the source. We're not putting our post on Indeed. Like I'm going to go take you and I'm going to give you a better job. We're going to give you health insurance. Like I'm going to take you. You can't just put a post up on Indeed and Craigslist anymore.
Yeah, I think the labor market right now, it's really unique because we're under the assumption that people that were working 3 years ago are going to come back and do the same thing, right? Hello, the world changed, right?
Yeah.
If you haven't caught up yet, the world changed. And if you're hiring and you think that the same job that you did 3 years ago exists,
So guys, when he comes back on, his internet went down for a second. I'm just going to fill in here. The problem being is that we're building out a company where we're going to buy multiple companies, right? Multiple things. And you can look at, are you going to raise prices? Are you going to scale? Are you going to do this? What are the items that you're really going to attack? But as the way I see it, the way that we're positioning our thing is the recruiter, the onboarding process of said, kind of thing that we're building. That's really where we're putting most of our focus, right? And I'm willing to pay more for the people and support them. Maybe what my philosophy is very simple. I'm going to hire before I need to. Well, why are you going to do that? Because I can scale up the work with marketing jobs, internet ads, all those things, right? But if I don't have the people, I can't, right? And so I filled in, and I was just talking about what we're doing. But you're saying you cut off. It said, if you didn't notice, the job that you thought was around is not around anymore.
yeah, man, I think the labor market, it's really the puzzle right now. Like whoever can crack that code is going to really have a competitive advantage going forward.
Well,
Because
it's funny that you
those
say
jobs
that.
are not there anymore.
I texted my partner yesterday. We handled the acquisition. I said, I don't say this to be dramatic, but the recruiter and the HR person that we hire, I believe this thing that we're building is the most important person in the entire thing. Because here's what I'm seeing, right, from a business point of view. These companies are doing 4 million, 5 million, 3 million with no marketing, no CRM, no systems, no nothing. So I can turn on the ads, I can turn on the SEO, I can turn all that stuff on. But if I don't have the people to take that work, then we really don't have anything. And so And so at the end of the day, what I was saying when you were gone, I'd rather hire before I need it and then work into the work, not the other way around.
Right. And I think when you and I were talking about like getting together again, I've been reading this book, which this is the second time I read it. It's by Howard Marks, a great investor. He has a great podcast now too called the Memo, I think. And he had this book called All the Important Things back in the mid 2000s, and it's basically there's no one thing in investing. There's many things. That's the whole point of the book. Mm-hmm. And then his second book, it's called Mastering the Market Cycle. Right. And that's why I was thinking like, hey, this could be a great discussion because this is the time when a lot of both the long-term cycle and the cyclical cycle in between is finally changing, right? Like 40 years of interest rates going down, we're finally seeing that change, right? Globalization, we talked earlier, is changing. Labor is changing. Demographics are changing. So that's really what drives the mega picture. Right. If you think about, like the wave, like I like these there's these Charles Dow, who, was a writer for what used to be the Wall Street Journal in the 1920s. He wrote basically of the market being like an ocean. Right. And then he had the tides, right. The big waves, right. That can last years or decades. Right. And he called these are the primary trends. And Warren Buffett and his mentor called these the waiting machine of the market. Like, this is the big picture we're talking about, right? Like COVID is just like a data point in this big picture, right? Yeah. Then the second level is the waves, right? So the tide, the waves, and the waves is this intermediate trend, right? Like 2008 financial crisis to COVID to now, right? That's in the middle. And I think in that one, you're going to see a lot of noise and a lot of fundamentals, right? The fundamentals are like the economics, like the labor market, the economy, what drives your business, supply and demand. And then the noise is what you're talking about. Like, man, like crypto goes down, goes up. And then there's a lot of sentiment there too. And then you have the ripples, right? Which is like the minor trend. And that's all emotions. That's all psychology, greed and fear. That's it, right? And a year ago, I got this magazine at Whole Foods where it's like how to make money in crypto, right? This year, you go to the stands this year, and you're gonna see how like it's all about like the end of crypto, right? Because that's the emotion. That's now crypto might be a 10-year. I mean, we're already 10 years into Bitcoin, right? So that might be a wave, right? But this is just a ripple within that wave, right? It might take decades. It took decades for the internet to become the internet, right? So you're going to see a lot of those emotions. So hiring early, to your point, it's part of that intermediate wave or that tide, thinking ahead, thinking like, okay, well, we might get a recession. Things might get tough. The market's tight. Eventually, the market might get looser. And you're going to actually get people that want jobs, right? So being ahead of that, thinking big term, big picture, long term, eventually you end up basically making the decisions that are going to drive the next 10 years, right? And you and I talk about this a lot, like in like just habits and and things like that. You like Atomic Habits, right?
No, it's funny because I attach different things to a reason, right? And what I mean by that is like it hit me. It's 3 months ago when I was sitting in that man's living room, buying his company. Don't get me wrong, revenue, they're the lowest price per hour. We can shift things, all that stuff. We're going to do all that stuff. But then I realized that the data point I wanted to hit was I wanted to win the award for best place to work. So if that's my why, then my actions are going to move in that direction. If we become a lightning rod for people to come out for a great place to work. And guess what? Behind that, we're going to have more people to push more profits.
Right. I mean, it's like, what's a competitive advantage for a company today to attract talent, right? Like, let's be honest.
It's health insurance. It's upper mobility. It's where their kids live. It's the school system.
Flexibility too.
Flexibility, okay? Yeah.
You know why? Because the world became flexible, right? Like all of a sudden we realized, I mean, you and I, dude, we used to meet up at a coffee shop and have this chat, right? Like we're doing it. Yeah, my connection went off, whatever. But the world became flexible, right? like that allow you to travel and like do the podcast from everywhere. I see you everywhere, right? So that is because you can do your job from anywhere, right? Now, not all jobs have that luxury, but if you can find a way to tie help, what people want, like
it's really funny that you say that. So
right?
one of the things I came up with this week, this is like my biggest idea ever, and it's crazy and it's going to be so great. And I hate to give it away, but nobody's going to do it, so I'm not worried about it. So we go to this technical school, and I asked them, like, what's the problem? We got this big building with HVAC places everywhere, right? And he said, well, look, some of these kids live in the dorms. They're traveling for 3-4 hours, to be in school for 2 years. So what I'm going to do is I'm going to buy a semi truck, and I'm going to create a training facility inside the semi truck. And so now I can come to you, right? I can come to our locations where we are around the country, and there's branding on the outside. And now we become something that's talked about, but we're also, what are we doing? We're allowing flexibility. Oh, you don't want to come to the training? We're going to bring the training to you.
Right. Yeah, I did. I benefited a lot from flexibility. Like there were trainings that usually would happen like in New York. Like that's, when I chose to come back from the Northeast, like it's like, oh, I have to travel to New York for like, whatever training or and like, dude, during the pandemic, they opened up like all these access and it's benefited tremendously in my development and my own growth, right? So, and then working from home, right? Like depending on your job, the ability to be at home, to manage to blend life and work, right, into something more cohesive that can work for you. I think that's a huge competitive advantage going forward. And tech had the upper hand. I think they didn't use it well. I think big tech, it's basically like, and you and I talked about this years ago. Like Austin didn't suffer from the housing crash because, tech was booming, and we still have a lot of tech companies going on. So they had the ability. Most tech companies have the ability to have their workforce remote, right? And imagine if you can just suddenly cost by saying, you know what, guys, we have this huge campus. We're just gonna sell it, and you'll work from home. We'll give you a stipend, whatever. That lowers costs. That drives, the actual earnings, right? But what they did, their competitive advantage was on like, well, we're gonna give you all these stock compensation, pay you really well. We're gonna give you food, massage chairs, whatever. Like that's not competitive advantage. I'm sorry, right? So when you're attracting these really high quality talent, suddenly this is why you're selling them. And then now you're going through your crisis. And then it's like, well, I have to cut costs because I went from being Facebook to being Meta. My stock went down 75%, so that's worth nothing. Then suddenly I cannot really give you food. I can barely pay you a salary, right? And like, what's your competitive advantage, right? They should have used all these different things, right? Mission, the vision, and the culture of the company to keep people, to drive them strongly. And I'm not hating on Facebook by no means, but I think this happened, they're the poster child, but it happened across all tech. And then they're losing their competitive advantages because it's a competitive space, and they didn't know how to set up the right culture. I think culture is huge when it comes about talent retention, attracting people and developing people. So we'll see what happens, but yeah.
I'm reading a book right now that's changing my life. I don't know how I just got it. Good to Great.
Oh yeah,
Jim
I think
Collins.
it's there. Yeah,
dude,
yeah, you see it right there.
Yeah, and and I'll give you the long and short of it. He said, the successful CEOs of the most powerful companies ever, they weren't the flashy ones. They had competition, but they were quiet. They were stoic. I think what was happened with technology, there's this guy I study. His name is Andrew Wilkinson. He's a billionaire. He's 30. He owns 40 companies. He's invested in 80. He's a really interesting cat. They call him the Warren Buffett of the internet. And he lives in Vancouver. And he said, look, I don't want to innovate. He goes, innovation is for Elon Musk, is for somebody else. He goes, I want to be tangibly attached to something that means something. And so here's my theory. You got the baby boomers leaving this kind of paper and pen, not technology businesses that still needed HVAC, plumbing, electric, title company, all these things. In my 20s, I wanted all the things that got me headlines. I wanted to be the flashy. I wanted to be everything. But now I'm building what I consider real legacy, real wealth, and I have to highlight other people to do that. And so we're going more for lack of a better word, the boring route, but more importantly, the essential route. Because if I really want to get granular on it, if you don't have your AC working in Texas in the summer, you're going to fucking die. And so I know I'm not trying to be hyperbole, but it is something that's needed and it's not going to go away. And then if I take that note and then they just passed 2 laws that they have to upgrade every refrigeration system off of Freon over the next 30 years, and they're getting stipends from the government to do it, the sector's going to triple in the next 30 years. Pair that with technology and being able to do margins, it's kind of a recipe for what we're really excited about.
And you mentioned Warren Buffett. Guess which company is back in the top 5 of the S&P? Berkshire. Like, this guy is like, you know what I mean? Like, he bought energy companies, insurance, like boring businesses. Yes, he ended up dabbling in tech and whatnot, but talk about consistency, right? And leadership and integrating businesses. Everybody looks at like Elon Musk. Look, he's this, he's a genius. Like, no disrespect, but
yeah,
like, is he a leader? I don't know. I really
he's chosen. So here's the problem. Here's the thing with Elon. I respect it. I can see it from afar, but he's chosen volatility as his vehicle. Like, he lives and thrives off of volatility, and that's okay. He's the innovator. But here's my thing. I don't want to get 75 phone calls a day. That's not my game. Right. And so when you, and one of the things, it's funny, I could look through our text chain and like, that could be a fucking college course. Like,
that could be a college course. Yes.
I mean, and what I'm saying is that one of the things that you've taught me, and I think is I really want you to hammer down and talk to people about this, is like I'm a risk taker, and I'm willing to go and start 1 million companies and fail. I'm totally fine with that. But you've really taught me to separate emotion and kind of, talk about risk and downside. I don't think people, especially real estate investors, don't really understand the downside risk protection.
No, I think you're absolutely right. Risk management is key, right? And there's this saying that, like, I saw it yesterday, by the way. I went to get a haircut. Shout out to my barber. Dude, I drive an hour to see this dude. He's the best. And I stopped to buy something at the gas station. There was like the lottery stuff, scratch it. And it's like, if you don't spend money, you won't make money. That was basically what they said, right? And I'm like, that's true. But if you lose your money, you don't have money to play, right? That's just the bottom line. Like, if you go to a casino and you put all your chips, in black, and then you lose it all, you're done, right? So it's like, can you really find a way to continuously have chips to put on the table? That's the whole point about risk management in a nutshell, right? It's understanding that, like, if something goes wrong, will I be able to come back from this, right? Will I have some, or do I have to fully start from scratch? And it's easier to create that mindset when you have little than it, and that's the tuition fee early on in your career. But then eventually, as you get bigger, it comes down to 3 things that I like to highlight. I learned this from the CEO of UTIMCO, Brett Harris, who's like, a time in our industry. And he calls it the 3 bullets to the brain. One is leverage, right? Because leverage magnifies returns, but it also magnifies losses. So managing the leverage correctly is huge, right? So it doesn't mean 0. It doesn't mean 100. It means the for each company, for each business, it might be somewhere in the middle, right? If you're early as a company, you might not be able to get on a lot of leverage, like a debt, because you have no business, right? So you might have to go through the equity, getting people to put in, money into the equity. And that's like, think about venture capital, right? And then as you mature, like Warren Buffett, Berkshire is a mature company. They use debt because they're stable. They can acquire that more cheaply. And you have to manage the 2. So that's leverage, right? And then right now, here's a key with leverage. Interest rates are going up. So if you've been building your business around leverage, this is a terrible time for you, because you're going to be refinancing at higher rates for the foreseeable future, right? So if you were a real estate guy, hey man, bought a house, 100K, 3% interest rate, then you think you're good unless you locked it for 30 years. Or if you were planning, like, rates are going down and I just refinance at a lower rate next year, That's gone. So if that was your business, you're out of business, right? The second element after leverage is liquidity, right? Why liquidity? Just think about it like this. Let's say that you have a great company and you're trying to expand, right? And then we go through a recession in a year, right? And you're like, man, my biggest competitor is going out of business, right? And they're selling their assets. I wish I can buy them, but I don't have any liquidity, right? That's the key with liquidity. It's great for that. Or you got laid off and you gotta basically find a way to survive until you find another job, right? Having liquidity is the way you access that. So leverage and liquidity are huge in terms of risk management, right? Again, the level of liquidity depends on the company, right? So what do you really need to survive for the next 6 to 12 months? Or how do you feel about like leveraging liquidity, right? And sometimes you can merge the two, right? You can use, credit lines to be able to provide liquidity and so on. But when things are tough, people that provide credit don't want you to use that credit, right? It's just unfortunate when you need the liquidity the most. You might need from real cash. So cash has a purpose. The last one, which is something that a lot of people that are not portfolio managers don't understand, it's concentration, right? So if you want to get rich, right, like wealthy, mega wealthy, concentration is the way to go. You start a business, one industry or something very specific, and you hope you become successful at it. There's no other route, right? And like I'm talking about, like if you want to be Elon Musk, right? Like you gotta go all in on something, right? And as things start playing out, right, then you need to diversify, right? So you start with concentration, right? Put all the chips in black, and then as you develop as a professional, as an investor, as an entrepreneur, then you diversify, because concentration is a wealth creator. Diversification is a wealth protector, right? They both have a purpose, but most people don't understand the difference, right? They think like, well, I own 3 different properties, I'm diversified. No, you own real estate, right? If that's what you own, whether it's commercial, like that's one industry. It's very cyclical, right? Oh, well, I own a business, a private equity business, and that invests in tech, in big tech, across all tech. Well, you're investing in tech, period. There's no other way to put it. So portfolio managers like myself think in terms of diversification and the trade-off of concentration, because we also have to make money. So how you concentrate and diversify, the mix of those two is really how you compound at higher rates of return. And that's where risk management plays the biggest component, right? In setting up the probabilities in your favor. You're not always going to be right, but more often than not, you want to be right. And I'm going to touch one more, the sources of return. Most people don't know when they're right, they don't know why they're right? So look, I bought a house, I flipped it, and I made money. Okay, was it because the market was hot? Was it because you did something to the house? Like, why did you make money, right? I bought a business and somebody wanted to buy it from me for a higher price. Well, what do you do? Did you fix the operations? Like, did you increase the revenue? What happened here? I bought a crypto and it doubled. Why did it double, right? Do you understand what's going on? Most people don't. So here's something I want everybody to remember. There's 3 main sources of return for anything. This goes for most companies, most investments. Usually you have a growth component, right? So with the exception of commodities, you have a business is growing. You have a property, you can increase the rent next year. That's growth, right? So if you have growth, that's a great source of return. It's very good source of return, but it could be cyclical, right? The second one is a yield, like a cash flow in a property, right? Well, every month I get, paid this much, or like I'm a lender and I lend at 5%. That's my yield, right? And then the last one is valuation. This is where emotions typically tend to take it to extremes, right? Why you pay for something matters, right? Because if you pay too much for something, the likelihood you're going to be wrong is really high, right? But if you buy it very cheaply, even if you're wrong, right, the odds are better in your favor. So that's the valuation component. And it's all about sentiment there, right? People, I like to joke about this one. Like, yeah, I bought my house 3 years ago. It doubled. Why did it double? Yeah, I did a few things in the house, but I didn't really change the core of the house. It's not because the growth or the cash flow changed. No, right? It's because the sentiment. Somebody thinks it's worth more, right? But nothing really changed. That's valuation, right? The sentiment component of something, right? I bought crypto, Bitcoin at 60,000. Is that a great value? Now that's 15,000, right? Now, crypto is all emotion. That's fear and greed, period. But there are some people that actually had a valuation model tied to it. And they say, well, it could be worth 500,000. So I'm going to buy it at 60, right? So yeah, good luck, like, because right now it's 15. So that's what people are willing to pay for that. It doesn't have a growth component, right? The main growth is like, oh, can people, develop the new crypto, right? Like the supply of it. But it's not something you control. Like a company, you can help drive the revenue, like, educate your employees and ta da da da. Or a property you can add to it. Like that's the growth component, right? And then the yield is what we're talking about, interest rates. The yield is always a function of the environment. If you're in a higher interest rate environment, the yield should be higher. So understanding, and people forgot about that component because rates were so low, right? So now I just want to remind people those are the three sources of return. Don't forget about yields as rates are going up, and always think about valuation because that's where most people get it wrong. They just go with the hype, fear of missing out, and then you just put the odds against you. So.
Well, guys, I hope you just got a master class in investing in economics. So, and one of the things I want to present to you is the sentiment that's changed inside my mindset moving forward. And it took me a long time to get here, as I've been, in the real estate space for many years, 7+ years, give it maybe longer. I've seen a lot of projects, a lot of interesting projects, shipping container hotels and just, real estate deals and Airbnbs. I've seen, hundreds go to the table and never get funded. And so I've changed my mindset on real estate. I still believe it's an amazing vehicle long-term to make money, but here's my thing. I believe in just my personal portfolio that real estate is something that I can put cash into once I've already made money in the businesses that I buy or a high income earning, not the other way around. So meaning it's a vehicle to dump my money now, not create my money.
Not a wealth creator. It's a wealth protector. Is that what I'm hearing?
It's a wealth protector. Okay. Exactly.
Yeah.
So I'd rather go on the business route because I can pull the levers quicker and change things and acquire, and it's tax-free income within the business until I pull it out, and then dump the money back in, because we're only going to be taking 30% to 40% of our cash flow, and then another 30% is going to go back into other investment vehicles within the company, so on. You can go any route you want, but for me personally, I'm tired of having to be at the whim of mortgage brokers. Like, I'd rather have the cash to go do my projects for myself because I know they're going to be successful and not have to live and breathe by them approving me.
Right. Yeah. I mean, I tend to be pretty agnostic when it comes to businesses, that like, I think they all, when I think about investments, I think about across the universe, right? And because they tend to do better at different times, right? There are some investments that are pro-cyclical, like as the economic cycle expands, they tend to do better. Real estate falls there, right? And then there's some investment that tends to be more counter-cyclical. So this is like, if I invest in like, I don't know, Walmart, right? Like, or COVID hits, everybody's buying toilet paper, right? So guess what? Like, people are gonna continue to do that stuff, right? So dentists, believe it or not, dentists are a great investment in counter-cyclical times because people, typically tend to go there. Healthcare, equipment, like insurance. Some people tend to continue to maintain certain business lines. So that's the way I see the investment landscape. How you deploy that as an entrepreneur, it really varies on your skill, right? Mm-hmm. So if you do have if you feel like your skill set, it's better outside of real estate, and then the liquidity needs that you need to fund your business are better, then I think that's a great decision, right? If you have an expertise in real estate, meaning like you can really assess location and be able to manage your funding, have good ways to scale and expand. Maybe you even have a construction component. I feel like if you don't have a construction component in real estate, it's really hard to scale, right? Unless you're only the funding source, like if you're coming from a financial perspective. So when it comes to other businesses outside of real estate, call it like an entrepreneur route where you're creating a business with employees and you have a product to sell or something like that. There's this operational leverage factor that which you talked about. Like, how can I continue to grow my revenues without adding new staff, without adding new mortgages, without building another house, right? Like, that's the problem with real estate. To scale, you need land and you need properties, and right. But if you all of a sudden you have a product, I don't know, the next iPhone, and you find a way to produce it within the same facility, like double your output without having to put it, that's operational leverage, right? And I think that's where, companies that have become huge eventually is because they found that, the holy grail, right? And I think Tesla is an example of one that have struggled with that holy grail, how to get the operational leverage. Like, they cannot really fulfill, they have the demand, but they cannot fulfill the orders, or the parts are too expensive. Like, that operational leverage hasn't fully always been there. And it's one of the reasons I think they're revolutionizing the car industry. But imagine if they would have gotten the holy grail, like they will be the number one company in the market, period.
Yeah, and I think what's interesting, right, is I could go through my notes and pull it out, but I had an epiphany, and I realized why, early in my career I wasn't challenged. Like, I only want to run races moving forward that I can't win. Like, I think that's why you and I like cycling. I think that's why you and I like that kind of races, is that you can always improve. And for me, the business aspect of it is always, we're taking over a company. There's 170 things we could do, but what are the 5 main things that we need to pull levers on for the first 5 months and then work from there? And that's kind of where my brain goes to this day. I think we need to adopt more of a long-term mindset of like, this is what the business you're going to be in, meaning investing or entrepreneurship for 50 plus years. It doesn't need to happen in 2 years.
Yeah, and you always post about that, and I love it. It's like, we tend to overestimate the short term and underestimate the long term, right? And you're like, 1% better each day, 1% better each day. That stuff's going to add up, right? 10 years from now, you're going to look back and you're going to be like, wow, like, like you and I talked last time in the podcast, a couple of years, like, man, like the growth in the last couple of years, just professionally for me, has been immense. Because to your point, like, hey, I'm into this industry. This is my profession. This is my craft. I approach it like a craftsman, right? And I try to like continue to educate myself, to try to learn from experiences. And again, not measuring against Warren Buffett or like, like, can I be better than I was yesterday, right? And I think that mentality is really what sets a lot of people apart. To your point, I'm not gonna beat the record for a marathon. Like, that's like almost 2 hours. Like, you know what I mean? But can I beat my own record, right? The next time I race, right? Can I continue to work hard on my own craft so that I can continue to show improvement day after day? And then, being disciplined and strict. I think you a great example of discipline in being consistent. This year, my motto was consistency, right?
Yeah.
Next year is discipline. Like,
well, it's funny.
They sound the same, but they're different.
It's funny. I've given myself some grace this year to lean back on some things that in the past I would have beat myself up for. Like, hey, you're not feeling great. You're kind of like, one of the things that's the hardest thing I'm working through right now is that my level of busy would like blow people out of the water. Like, the last couple of months I've been busy, but not busy in my terms, right? Like, I don't have as many meetings. And so instead of like beating myself up, by the way, if I wrote it on paper, I'm still doing, 90 million things. But but looking at it more of a season to like take a day off or rest or sleep in just a little bit, knowing that in January, when we close the business, it's going to be 24/7. Like,
well,
I think
the race
that
never
is
ends.
Yeah.
That's the problem, right? In our world, the race never ends, right? Like, yeah, the markets are closed on Thursday, but you know what? And it's gonna be this week. It's gonna be volumes are low. Like everybody's away. Like the big boys are out, right?
Yeah, dude, I have like
So,
one of the busiest weeks I've ever had this last 3 months and these first 3 days, and I'm just like, I love it.
but
I love when everybody takes off and I'm still out there.
yeah, for you it's great because you're like, oh, I can do work, right? Like I'm the same way. But here's the deal though. In entrepreneurship, in business, it's not like a race. It's not like a sports season. You don't get a summer off, or like teaching. Like, yeah, it's 24/7.
Mm-hmm.
So being able that 1% better, that consistency, that's the key, because you gotta learn to be able to maintain that rhythm, that pace, right? And if there's seasons in your business, utilize those seasons effectively, right? Saying like, hey, you know what? Because I believe the importance is to grow. You also need rest, right? Like it's a part of the equation, right? So stress plus rest equals growth. That's really the equation. So without rest, you're gonna basically become burned out, and then your effectiveness might come down, and efficiency, and so on. So rest is important, but being thoughtful about how to rest, when to rest. You might only need like, well, if I do 10 meetings a day, maybe I need 8, and that will give me enough rest. That's good for you. It's personal, right? Some people are like, no, I gotta go to the beach for a week and just don't, or maybe social media. I don't want to be in social media for a week because, like, or listen to the news. So finding the right rest to support your lifestyle and be consistent, I think that's key in overall success. Doesn't matter if you're in business or not. I think in life in general, and then being disciplined is huge. I'm reading the Ryan Holiday's new book called "Discipline is Destiny," and I love it. Like, oh my God, he has this quote from Marcus Aurelius, is like, patience with others, strict with yourself, right? So like, you know what? Like, not everybody's gonna be Austin Linney and have like a million things going on, right? So you have to, like, be patient. Let them be them, especially if you're gonna be a big leader in an industry.
I'll be honest with you. I think as a leader, I think it's the only thing that truly matters. Is like, I can't tell you how many people I run into that are like, man, well, they're not doing it like as quick. And I'm like, dude, they're just different people. Like, you have to give them the space to kind of grow into their own thing.
Yeah, it's hard though. It's hard because if you're competitive and you're driven, you think everybody should be like you, right? I struggle with that sometimes, but I'm like, no, you have to be patient. There's a reason. I mean, I have kids now, and I'm like, like, you got to be patient with them. They don't know any better. Like, they're kids. They're being kids. That's what they're doing, right? So I lose my patience, but they're just being kids, right? And then the other one that he had in this book, that it was about what you spoke about, like, like be grace for yourself, like being graceful, like, yes, you know what, like, I wake up at 5 every day and like I do this. Hey man, like, okay, fine. Maybe today wasn't your day for whatever reason, or you just decided like you really needed a break. You take a break. But then the next day, just be like, okay, you know what? I'm gonna come back strong. Like, just it's okay, right? Like, it's just one day. In now, if you continue to fall apart, then that's different. Now you gotta be strict with yourself, right? But it happens. Life happens. My daughter was in the hospital. We had to reschedule this, and it's like, hey, you know what? Like, work is going to have to be work right now. It's whatever's going on, it's going to have to wait, because the most important thing today is my daughter, right? And make sure that, the family is good and everybody's good. So just prioritizing correctly. What's essential in your life? What's essential in your world? And if you can define those essential items, right? Keep the main thing, like everything else becomes really clear.
I think the biggest thing is once you define those things, don't apologize for them.
Oh, of course. No, absolutely. Well, that's the whole point. Once you find those things, there's no apology, right? Like, but because that means that everything else is
and if your friends or your family can't understand the boundaries that you set, then they don't need to be.
Well, you shouldn't care. That's the bottom line.
Yeah.
If you care, you haven't found your essentialism, right? So keep the main thing, right? Like, my main thing, I always say, it's investing, right? That's my main thing, right? Managing portfolios, understanding the markets dynamics, becoming a better investor. That's it. That's my main thing, right? When it comes in my profession, right? Yeah, like, I've thought about like, oh, I should do a podcast, should I do a book, should I do a, I'm like, maybe there'll be time for that at some point. But right now, the main thing is for me is this, and I want to maximize that. Why? Because there's other essentials in my life, like my family, right? My health that I want to prioritize. That if I want to do all those other things, then now I have to put those, below. They become unessential, and they are not. They are essential. So that's why you don't apologize, right? Because once you accept what's essential in your life, right, that means that everything else does not matter, right?
I mean,
and then
like
that's the only key to success.
I'll be as transparent as I can right now, and this is a a constant fight within myself. I was an alcoholic for 20 years. I've been sober, it'll be about 4 years in about another month, and I'm not really in the mood to be anybody's friend right now. Like not that I'm not a friend, I'm always available, but like right now for me, it's like I'm creating my legacy. Like I'm building businesses, I'm creating jobs, and like I'm not apologizing for the fact that that's my focus right now. And in order for me, because we want to have kids, and I want to have the freedom to take off Thursday and Friday. And in order to do that, I got to go buy 3 companies over the next 2 years. And so if I do that now, then I'm giving that time back to my kid later on. Right. And if that's what you need to do, then just
that's
do it.
100%, dude. And now the challenge is going to be when you have the kid and you have the 3 companies to want to be take off that Thursday and Friday, because you're driven, you're like, oh my God, like
well, we're gonna have way more by that time, but yeah.
Well, that's what I'm saying. That's where.
But that's why I have a big team. That's why we're hiring. That's why we're looking at it from a different lens. Yeah. We're not buying a job, we're buying a lifestyle. And so yeah, we might take some money, we might lose some money up front, but it's going to pay in the back end because time's so important.
Yeah. And you and I, we both love Tim Grover. And I remember in his book, Winning, he talked about like having to travel. He used to travel a lot to go see Kobe and Jordan and whatnot. And then his daughter was there like, hey, daddy, like, like, where you going? Where like he was missing something important. And he goes like, you know what, daddy, this is what I do to put food on the table, right? So she goes like, well, what if I eat less? Imagine if your daughter tells you that, right? Like I would be crushed, right? But sometimes it's like, he's like, well, you know what? Like he didn't cry. He just went on because he was setting an example. Sometimes that happens. Look, just last week or last week, my son had his Thanksgiving lunch. And I had to interview someone for a job at work. And so it's to your point about hiring, we've been struggling to find a replacement for someone. And I wanted to be there. It was my only opportunity to meet this person. And I was like, well, I have to be there because I don't want the decision to go. And then I wasn't part of it, right? And I had to make the choice. I was like, hey, and he was mad. Like he was so disappointed. He's at the age where he's disappointed. And I was like, hey, buddy, you know what? I'm going to try to be there every time I can, but there's going to be times I won't be able to be there, right? So managing those. Now, the weekend comes, I'm playing with him in his room, like you try to make up. The kids, luckily kids forget quickly, right? But it's like, are you there? I think we're getting to the point where it's like, being there matters a lot. So finding the time, more quantity than quality.
And one of the things I respect, because your wife is a very
right.
accomplished doctor, and you're running multiple millions and all that stuff.
Billions.
Billions, yeah. I'm trying not to say the number because I don't want to embarrass anybody, but yeah, 5+ billion. But what's interesting to me is I respect the hell out of both of y'all for still feeding into what you need to be a great parent too.
Right.
And I think a lot of people lose themselves in their kids, and you're there for them, but you're also doing what you need necessary to make you a good father too. It goes back.
If I don't do that, then I'll be a terrible dad, right? I'll be a terrible dad. In fact, the days that I feel like I'm failing as a parent, as a everything, is the days that I'm not being myself. I'm not also feeding in the things that I the essentials, right? Like health, faith, or contemplation, meditation, like all these things that I try to balance my life. If I don't do those things, I feel like I'm failing in life. If I'm failing in life, then I'm failing them as a parent or as something else, right? As a role model, and then I'm failing at work. So if I'm not doing great in my job, then and it's like a juggling, right? And
Yeah.
I'm gonna steal this from Brett Harris again. You know, he's a CEO or a company. He's been really, really influential on me. But he says like life is basically a bunch of juggling balls, right? You have your health, you have your family, you have your friends, you have your faith, and then you have your finances or your work. He's like they all of them are crystal balls except for one. You know, so all of them are crystal balls. You cannot drop them except for one, and the one is really working finance, right? So he's like, that one's a rubber ball, man. You know what I mean? That's what I meant. We're the hospital. That's the rubber ball. Now, I was just catching up on, it's been a really busy year. I was just catching up and I was like, yeah. And then I fell behind again. You know what? It's frustrating, but like that's the cost, right? That's the cost. At least it's a rubber ball. I can get behind on that. But, you know, my daughter's at the hospital. She's having a little surgery. I need to be there, right? So um, it's just that managing that, and I think that's risk management, right? Like we're talking about all this stuff. That's part of risk management because if I don't protect those crystal balls, then nothing else matters, right? So I think finding those crystal balls in your business, in your life, in everything that matters to you is really huge, and that's a skill I've gotten from being in this, you know, investing in risk management business that you know I've tried to put in my life. How do I see about that?
I love that. So we're gonna get out of here, but before we do, uh, give your brief kind of, it can be a couple sentences or your word or your thought as we move into 2023, your view on the economy.
Man, this year's been really difficult. I'll start with that. We had a war that caused commodity prices to spike. We've had the highest levels of inflation we've had in decades, right? I had to go back to the 60s to try to like learn about this level of inflation. Therefore, high interest rates. The hardest the Fed has gone at you know, at fighting something in recent years. That includes COVID and the financial crisis in 2008. So as we go into 2023, a few developments that will change is that I think the Fed is going to start, you know, hiking less aggressively. Right, we saw the first signs of inflation started to moderate. It means going down. I think inflation is going to stay elevated. It's not going to be 2% like they want, but it might be like 3 to 5%, somewhere there in the next few years. That includes 2023. Housing, I think the credit markets, like housing is done. I think if you're in real estate, man, you better put your big boy pants on because, you know, if you think we're going through something bad right now, if we do go into a recession, it's going to get a lot worse. So there's 100% probability of recession next year. I think I'm starting to see a few like economists come out and say, well, maybe not, right? So I think if you really look at the evidence, there's likely to be a recession in 2023. That's the evidence, right? You can ignore it. We might avoid it. Consumer spending strong, so that's a positive. Labor market's strong, so that's a positive. But if those things remain a positive, the Fed's going to be even tougher. So then if the Fed becomes tougher, that means a recession. Now, recession also means opportunity, right? So being able to think opportunistically. This is where having low leverage, high liquidity matters, right? Diversification matters during a recession. So, you know, I've been fighting these urge I started the year defensive and I've become more aggressive in the middle of the year. And I've been fighting this, you know, battle of like, should I be more defensive, should more aggressive? I think right now I'm pretty neutral. And I think going into 2023, you know, I might be neutral, but opportunistic. If I see signs that we're going to skip a recession and then risk on, then try to be more aggressive. And then if I see signs that no, we're going into a recession and this could be pretty bad, then might be more risk off and a little more defensive. So I think anyone out there, business owners, if you're short-term rentals, have a lot of liquidity, you know, plan on spending being low, right? There you go. If you're a business owner, man, manage your cost. Manage your cost, input costs, inflation, employees, try to look for retention. This is not the time to overinvest. This is the time to look for opportunities, right? And if you're an investor, this is the time to be defensive but opportunistic, right? Like, don't wait too long. If the coast is clear, go on. But also be mindful that the next year is going to be pretty pretty choppy. If when you continue to use the ocean, the tide is coming and it's changing, and this is the time to manage the risk appropriately. So that will be my closing remarks. I wish I could just end it in a positive note, but there's really little to be too positive about. I think the only positive is that, we might have seen the peak in inflation. Maybe we saw the peak in the Fed, hopefully. And we'll see how things go from there. But I'm trying to use very data dependent.
Well, I'll finish it off with a positive note. Okay. So here's a mindset shift that you can have with where the market's at, regardless of where it goes. A lot of times in life, we're either moving too quick or the market's so good that we can't do maintenance. So in my opinion, you can treat this time as maintenance on yourself. You can read more books. You can take care of your health better. You can spend more time with your kids. You don't need to look at it as all negative. There's a lot of positives to do stuff that you aren't available for. Go play catch with your kid. Go fish more. Play golf more. All those things that you can get outside. And then when the market does turn around, you'll be that much rested up and ready to take advantage of it.
I love it.
Yeah.
I love it.
Awesome.
Maintenance. I love that. By the way, I wrote it.
It's my new thing. It's my new thing.
Yeah. I mean, think about it, right? Like if you're a machine, like you got to maintain it, man. Like you're the best machine created in the world. Like our bodies are a machine. So
100%. Yeah.
Way to take us out.
Awesome. All right, guys.
Good to see you.
Thanks everything for this. We'll see you next time. Thank you so much.
Thank you for listening to Construct Your Life with Austin Linney. If you enjoyed this episode, be sure to rate, review, subscribe, and pay it forward by sharing with a friend. Most importantly, take this opportunity to start constructing your life by taking immediate action on what you learned. For show notes, resources, and more information on one-on-one coaching with Austin, visit constructyourlifepodcast.com.